Hello and welcome. Today I want to visit with you a little bit about mortgage rates. We're currently in the fourth quarter of 2022 and we're seeing that we're having a trend of mortgage rates increasing. According to Len Kiefer, who's the Deputy Chief Economist for Freddie Mac, we've seen a 3.83% increase. Let me put that up here on the board. 3.83% increase since the beginning of the year. So end of 2021, year to date 2022, this is what we've increased. It represents the largest increase in interest rates over the last 50 years. So as we move forward, we're going to continue to see pressure coming up on interest rates. The key behind this is while we're watching what the Fed is doing with the Fed's funds rate and their increase of 0.75 of a point recently, and that's happened multiple times, I want you to be watching the 10-year Treasury bill. Mortgage lenders are basing their rates based on the 10-year T-bill. Now, if we look at that T-bill, we're seeing some positive pressure because we've had the best inflation numbers that we've had all year come out. We've had the stock market start to stabilize or at least start to rally in the other direction as we come out of midterm elections. And we're starting to see a little bit of stabilization, but there's still going to be some pressure on those rates in the sense of we have to keep the inflation where we want it to be so that things don't get rampant. So as you're looking to buy and sell, understand that this is the increase, largest over 50 years, but watch the T-bill. At the time of this recording that we did this video, yesterday interest rates took a 0.5 point increase, meaning they got better for you. Right? We went down in the T-bill, which means the interest rates get better, and that's going to move. Interest rates are constantly moving. But this is something to be keeping mindful as you're looking at future and as you're looking at buying and selling, because we're going to continue to see that pressure on interest rates, which is going to affect how many buyers are sidelined versus actively in the market. Thanks for being here as we talk about interest rates.